Kitco News, special coverage of the New Orleans Investment Conference, is brought to you by Uranium Energy Corps and U.S. Gold Mining.
Hey everyone, I'm Jeremy Szafron. Welcome back to Kitco News. On location at the 50th anniversary of the New Orleans Investment Conference, it's a busy show here. Lots of investors walking around looking for new opportunity. Now, gold has been on a wild ride recently, with prices soaring $100 in the last week after a post-election sell-off. Spot gold is now back once again above $2,600 an ounce. This dramatic movement comes as geopolitical tensions, particularly the ongoing Russian and Ukraine conflict, return to the spotlight. But the big question is this a short-lived bounce or just the start of a major new cycle? Let's break it all down. We have Rich Checkan. Rich is the president and CEO of Asset Strategies International. Great to see you in person, Rich.
Good to see you, Jeremy. Thanks for having me.
I appreciate this. We just talked about it. It's been a crazy wild ride for gold this year. I mean, we were up more than 28% year to date, so still doing exceptionally well. But we had that sell-off just after Trump was elected. Break it down. What was that all about?
Well, don't forget that we had a run-up before Trump was elected. I wrote about this probably a couple weeks before the first rate cut, the 50 basis point rate cut that the Fed did here in the U.S. It was their first cut after a rate tightening cycle. And typically that portends a rally in gold almost immediately. And it portends well for gold, silver bullion, and gold and silver stocks for the next year. Okay, whenever you see that first rate cut. And sure enough, gold was up $100, $200 like within a week or two. So we had that run up. It needed to blow off a little bit. I think some of it may have been buying the rumor and selling the news. They were pricing in, I think, a Trump victory. And let's be honest, after Trump's election, basically what we saw there is a president that is deemed to be favorable for the stock market. Right. So you saw some money run into the stock market. And absolutely, he's an administration that is deemed to be very positive for crypto. And oh, by the way, Bitcoin's up a little bit too. I don't know if you've noticed that.
Just a little bit. We'll get into that. Okay, well, to your point, I mean, we're back at approaching $2,700. Yep. It has stabilized. A lot of analysts I talked to just said, listen, it was a healthy correction.
It's a great dip.
Looks like it was.
Something to be embraced, nothing to be feared. Load up on gold, buy well. Okay.
What's your outlook here following this election result? I mean, January, we're coming into the year end. Are we still going to see a little bit of volatility in the markets?
I honestly think so. I don't know for sure. Ask me 3 months from now, I'll tell you exactly what's going to happen. But right now, I think, and into probably the end of the first quarter, I think we might see this continue. I'm not sure. And my reasoning is this. There's a little bit of euphoria. There's a little bit of belief that I forget what they call it, the efficiency department or whatever.
Doge.
The Doge team, that they're going to come in with a chainsaw borrowed from Argentina, most likely. Yeah. They're going to just start cutting government to shreds. I don't think they're going to be as effective. I hope they are, but I don't think they're going to be as effective everybody thinks they will be. And let's face it, coming up to this election, the two candidates have very different policies, make no mistake. And that did, you fell one way or the other and there's no in between most likely. But where they were the same was fiscally. They both spend more money than they take in, and it's just on different things. So we're going to see unbalanced budgets, deficit spending continuing, and they both came in promising they would never, ever touch entitlements, Medicare, Social Security, and pensions. So if you're not touching those things, guess what? We're going to expand the money supply because we're not going to have balanced budgets, and gold is going higher. Right. Long term, nothing changes. But I think it's going to take a little time and time in the new administration to see that play out before people say, okay, business as usual, I need to get some gold.
Yeah, I mean, it's healthy, right? And we know that Trump is obviously pro-American in the stance, maybe even better with allowing miners to go out and actually operate in the gold field, hopefully. And a lot of people at this show knocking on wood right now are hoping for it.
There's a bit of anticipation there.
Is there $3,000 gold next year?
I think so. Yeah. So there's I think Goldman Sachs just came out with a prediction by the end of next year. They're looking for 3,000. I honestly think that's probably a little conservative. Right. Yeah. I think we'll be above 3,000 by the end of next year. Who knows? Long term is really all that matters. And unless we change our evil ways, and unless we start balancing budgets and being fiscally sound, gold is going higher. Anything of value is going to go higher.
Yeah.
Period.
Yeah.
Cup of coffee, college education, new home, gold.
Yeah. It makes sense. Okay, well, I want to get to a chart because you have one that shows the best performance since this part of the millennium. And we'll put it up on the screen for viewers, but I want you to break it down. What are the key takeaways from it? And then we'll get into Bitcoin in a minute because I noticed that it's lacking there.
Yeah, and that's not on purpose. Yeah. It's just, we'll talk to that in a second and why I omitted it. But I'm just looking at gold and silver, two monetary metals, which are the metals I would look at in this environment of fiscal irresponsibility, right? So I think that they're the metals that make sense to look at. I include platinum, palladium. And I also included the three major U.S. stock indices. And if you listen to the news, you listen to the talking heads, not your show, mind you.
Of course.
But the mainstream, what you're going to hear all the time is that the stock market is making new highs, new highs, new highs. That's all they do. They just make new highs. What most people don't realize, I said it on the panel the other night, I do believe it's the case. We have an education problem, all right? People are looking at those new highs and they're not understanding that those are new nominal dollar highs. But when your dollar is mismanaged and it's worth less and less each day, then that doesn't give you a true price discovery, right? If you measured the Dow in gold, right, what you know right now, after all these 30 some odd new highs this year, that the Dow is only 60% of the way up to the high it hit in the 99 dot-com bubble. Okay, so that's not a new high. That's not a new absolute high. It's just a dollar high, which doesn't mean anything because the dollar's changing value, losing value all the time. So you look at the chart and you hear all the mainstreams, and what I've put together is basically the Dow over so far this millennium, 24 years, almost 25. It's up, I want to say, I'm going to get this wrong, but high 200 some odd percent. The S&P is up probably a little over 300. The NASDAQ is up about 340, 360, something like that. Silver's up over 400%. Gold's up 818%. This dead asset that doesn't kick off interest, doesn't kick off dividends, is outperforming all the major indices so far this millennium.
Yeah, you brought up debt, and I want to get to that because we got $36 trillion in debt. A lot of people aren't talking about it. There's debasement. We saw an election happen. No one was talking about debt either. I guess that's the thesis for gold here.
Yeah, there's no question. So the presentation I gave this morning, my corporate presentation, I talked a little bit about this, and everybody gives all this credit to the Fed, right? They're going to cut rates, they're going to manage this, see if they can do a soft landing. They can manipulate markets a little bit short term, and they do. They manipulate. They're the biggest market manipulators on earth because their decisions affect everything. But what they can't do is they can't solve the problem. The problem is Congress is not balancing budgets, and nobody is honestly, seriously looking at cutting entitlements. Until you do those two things, you're going to see the debt continue to increase. And what does that mean for the world's reserve currency? It means you have two options. First one is you can just have a catastrophic failure and collapse of the currency. All right, so we can default. Never going to happen. Nobody on earth is going to let that happen. Not the U.S., not anybody.
Just keep printing.
Just print it. So that's the second option, which is death by 1,000 cuts, right? So we go ahead and we overspend, and then to pay for it, we create money out of thin air, which we really don't create out of thin air. That's not how value is created. But we have more dollars chasing a finite number of goods and services. That monetary expansion is called inflation, and it leads to an increase in prices as more dollars chase the same number of goods and services. So that problem is just not going away until there's a will to balance a budget and seriously address entitlements.
It seems like investor sentiment, too, in terms of Bitcoin has changed because there's a lot of people that are hedging against the fiat with Bitcoin, and this is why it's up, 891% since January of 2009. As I said, I noticed it wasn't in the chart. It wasn't in purpose, but talk to me about the case there.
So here's why I didn't include it. First off, the rest of those assets have been around for the entire millennium. Bitcoin just got with us in 2009. So you could say that's not fair, but it's gone further in a shorter amount of time. I still, to this day, and I may get some hate mail, I still think Bitcoin is a speculative asset. I say that because that's how it's being treated. We see these run-ups, and then we see the massive pullbacks. On the panel yesterday, Avi was talking about how he just sold a bunch of Bitcoin. He's strictly a chart guy, and he sold a bunch at 95K. I think we're at 98.
He's buying dinner tonight.
Yeah, I think we're at 98K right now. So it's gone up another $3,000. I was at a conference a week ago in Miami, and we were doing a Bitcoin gold debate, right? The day gold dropped $80 an ounce, and every speaker, so every 45 minutes, Bitcoin was up another $2,000. And I had to defend gold. We still won the debate, so gold's undefeated, but it's because of the demographic, right? If I was talking to a bunch of college kids, I would have got my lunch handed to me.
For sure.
But the bottom line is I still think it goes up massively, it comes down massively, it's being treated as speculation. People jump in, jump out. It is not a store of value like gold is. Mm-hmm. It may come someday. I'm not anti-Bitcoin. I own some. I bought it at $2,300. I love it. But it's not a store of value. I look to gold for that. And that's why that's not in that chart. But I love what it's doing.
Yeah. I mean, a lot of people, and it's interesting even on this show when we talk about it, there's a lot of people that go, oh, it's just a gold bug saying, oh, I hate Bitcoin. It's not the case, but there is a value add to having some diversity in asset class.
So a dark secret about the gold Bitcoin panel. Everybody that represented Bitcoin loves gold, and everybody that represented gold loves Bitcoin. You know, our answer is always the same. We argue and we put on a little show, but in the end, own both. Yeah. It's not an either or. It's not a zero-sum game.
I should say that by the time that we're doing this, I mean, it's almost at the $100,000. So we don't know if it's going to break over. There's some excitement here.
Well, I think this is why Avi sold. And I'm willing to bet that we're going to have a bit of a sell-off here as they approach six figures. Yeah. There's no question. That's technical, psychological level that I think we're going to generate a pullback on.
Okay, well, we need to consider the broader geopolitical picture with the U.S. continuing to back the Ukraine, providing funding and advanced weapons. The risks of escalation are growing, as we saw today. Ukraine's recent use of a long-range American missile has pushed tensions dangerously close to Russia's nuclear red line. Add that to the speculation about the other conflicts regionally, potentially flaring up before President-elect Trump takes office, and the global stage feels more volatile than ever. What does this mean for gold and metals?
Well, gold is where people turn when there's conflict, geopolitical conflict, tension, crisis, whatever. That's safe haven flows. That's not going to change. So that portends well for gold. I hope that's not the driver going forward. I hope clearer, calmer heads prevail. I'm a prior military guy. I don't like what I'm seeing right now, to be honest with you. I don't think people are thinking things clearly. When Putin is, signing decrees saying it's okay to use nuclear weapons if you have a full-scale assault on Russia, then I'm thinking that we are not going down the proper road. This has got to be worked out. I'm thinking that the world saw weakness, and maybe going forward they'll see strength and calm down a bit, but so far they're not. I pray for cooler heads.
Yeah.
This is not healthy for anybody.
It's not.
It may be healthy for gold, but if there's no world, what the hell are you going to spend your gold on?
Yeah, I mean, we keep watching it. There's obviously a lot of excitement about maybe Trump coming in and talking this down a little bit.
That's the hope. That's the hope. I don't think President Biden did a good job of that, to be honest with you. Not saying Democrat, Republican. I just think over the past 4 years that was not handled well. And I'm hoping we handle it better going forward.
Yeah, well said. Well, beyond geopolitics, the fundamental demand for gold faces challenges. ETF flows, a key indicator of investor sentiment, showed consistent outflows, right, since the U.S. election, totaling 1 million ounces. This echo is similar when Trump had his 2016 victory. Yeah. What are your thoughts on this?
So I'm going to say something that sounds controversial. This is not my thought, by the way. I'm sharing something that somebody else shared with me after Trump was president-elect the last time.
Okay.
And we had a similar thing, like you said. Gold was on the rise, and then it dropped off the table. And he said, well, Democrats don't buy gold. Libertarians can't afford gold. And Republicans only buy gold when they're scared. I can tell you that statement is flat out wrong because I have clients that are all three, Democrats, Libertarians, and Republicans. I can tell you they all buy gold. And everybody should buy gold. I personally think that, like I said earlier, it's buy the rumor, sell the news. I think we saw the North American and European, therefore the Western investor, start to get back into this market through the ETFs in May, June timeframe. I think that's when they started waking up. We saw retail investment pick up as well, certainly with a little bit of rocket fuel behind it once we had the first rate cut. That all being said, this is a healthy correction that comes out of both physical and exchange traded funds. Right. In fact, exchange traded funds are like the easiest way to jettison some gold and take some profits. Back in, I want to say it was 2003, when they launched the first ETF, a lot of folks in my industry, precious metals, retail, et cetera, thought that the ETFs were horrible. Right. Because they thought that that was competition for real, honest metals dealers, right? We never took that view. None of us in this industry can sell gold to 8 billion people. We need some help. I think the ETFs actually came along and raised awareness about gold. People that would never, ever buy it physically were taking shares in the ETFs and actually helping those who held physical metal by running up the gold price. But there's a price that comes with that since 2003, and that is volatility. You're going to see more volatility with ETFs involved. Live with it. Deal with it. Again, embrace it. If you're not seeing the signs that indicate the end game for the bull market, then treat it as a dip to buy on, to embrace, to buy well. Okay. If you see the end signs, when you start looking at the price of gold, you start looking at the duration, you look at interest rates, US dollar, geopolitical stability, social unrest or rest, sentiment, when your Uber drivers say, they tell you how much money they made in the silver market, when you start seeing stuff like that all come together, then okay, now let's look for the exits. None of those are firing right now.
One could say that that's happening for Bitcoin. I mean, I had the Uber driver on the way here asking me if I owned it.
Well, when that happens, I'm looking for the exits, not the entrance.
Right. You mentioned the Fed quickly there. I just have to bring it up. Obviously, we have an upcoming December meeting. Since September, 75 basis point cut. We're going to see another 25. Market split.
Honestly, I think we're going to. Time will tell. But, here's the thing. We took that 50 basis point rate cut, which was massive. I think it was a knee jerk. And Powell was questioned about it. And he said, oh, no. There's no issue. We got a healthy economy. He's wrong. Okay, our economy is not healthy. And that's why they did that. They believe, I think, that they have damaged the jobs market. So they went a little deeper on that first cut. They have not met their inflationary goals. They've not met any of the goals that they set forth before they said they would start cutting. But they do know that they did some damage to the jobs market, and they do know that they can't afford to service that $36 trillion debt at 5.5% or higher. All right, so they had to cut. They know it. They may or may not say it out loud, but I think deep dark in their deepest recesses, they firmly understand what they're doing. And I expect another 25 basis points. Okay. They're gonna meet the goal they said short term, which was we're gonna take it down a point by the year end.
Part of the reason because we got to service that debt. Is that what you mean?
There's no question. There's no question. It alone exceeds military spending, and our military spending exceeds what the next 7 countries put together. Absolutely. And our interest is more than that. That's not a good place to be.
What's your outlook then? I mean, there's still people that say if they do this, inflation will continue to rise and we're going to see more of a recession next year.
Of course, well, that's what I said, death by 1,000 cuts. This is the biggest no-brainer in the history of no-brainers. We are going to continue to spend more. We're going to continue to inflate the currency, expand the money supply, and that will lead to higher prices. There's no other way that this can play out. Right. I don't see it.
Jay Powell might leave when Trump comes in. There might be a little bit of a standoff.
I feel they're not liking each other.
I feel as though after the last meeting, what's your outlook for the rest of the year then, going into 2025? I mean, a lot of unknowns. We know what's happening after January with Trump coming in. Some of those tariffs might have a little bit of a reaction to the market.
Yeah, again, so they had different policies, right? But on Trump's side, so we'll talk about Trump because he is our next president. And he talked about tariffs, which, I know they claim that they're going to pay the bill. They never pay the bill. It's like when you raise taxes and you go to the business and you say the businesses are going to pay the bill. No, the consumer pays the bill. They're still going to make money or they're going to go out of business. Those are their only two options, right? So we're going to pay that bill with higher prices. And he's also talking about tax cuts, but nobody's concentrating on cutting spending, right? So if we get those tax cuts and we get tariffs and we get no increase or decrease in spending, we're going to create currency out of thin air and expand the money supply. When people
you don't
see
the
that,
dollar going anywhere anytime soon. It's just a matter of devaluing.
I think short term, a little bit of euphoria. So we popped from like 104 to 106. Everybody's saying the dollar's strong. A year and a half ago it was 116. It's not strong. So it's stronger against its competitors. Right. I'll give you that. It's not strong against gold. It's not strong against Bitcoin, God knows. So the bottom line is, like I said earlier, once we have about a quarter under our belts, and people can see that's business as usual, that we're not changing anything. If that's the case, then I think gold resumes its march higher.
Okay, the ECB is obviously concerned. I mean, we're seeing a lot of stagflation in Europe. They're trying to do some interest rate cuts, trying to get the economy going again. We saw some instability in China. What's the global markets going to look like this year? I
think they're all addicted to debt. We've got them all addicted to this drug.
And stimulus.
Yeah. So we're going to the heroin addict and we're saying, hey, I got more heroin for you. It's not a good thing, but they don't know how to solve the problems without stimulus and without overspending. They really don't know how to fix this. The answer for you and me, anybody who has a household, right? So you people at home, you have a household and you manage your debts and you pay your bills on time. We know how to do that. You say no to your wants and you say yes to your needs and you find a way to meet those obligations. Our government hasn't done that since '71 when we fell off the gold standard. Didn't fall off, we took ourselves off the gold standard. And since then we haven't balanced our budget, we haven't taken accountability, responsibility, we haven't been good fiscal stewards. And as a result, this is what you get. Until we change our ways and start making those hard decisions like you and I do every day, then, we're going to continue down this path.
So it's not going to be...
And that's worldwide. That's not just in the U.S.
Yeah. What about if the U.S. puts a Bitcoin strategic reserve in place and they sell the gold?
Honestly, knowing where I stand, that Bitcoin still, I don't know what it'll be someday. Yeah. And I say this a lot, again, more hate mail, but Bitcoin is a 15-year-old angst-filled teenager that doesn't know what it wants to be when it grows up. You talk to the Bitcoin community, they don't even know what it wants to be when it grows up. They're arguing themselves whether they're, completely fulfilling Satoshi's, vision, and a lot of them think they're not because it's not being used as a currency or what have you. It's still figuring itself out. So given that, and given it's being used as a speculation, is that really what you want to base your sound money system on? Right. Not in my book. Yeah. Gold is the only candidate.
You have a lot of clients, and I have to ask, when it comes to gold, when you see these dips, we're talking about volatility, clients picking it up? They're buying the dips?
They are. So not completely, though, because people are still in a tough position. I still have clients coming into me, selling metal back to me. They want to buy it. Yeah. They're selling it back to me to pay down credit card debt. Right? Because they can't take money out of their house. They've run up their credit card, 1.18 trillion, 24% interest. They've got to pay that off or it's going to get worse over time. So they're going to their liquid asset and taking care of business. But the bottom line, I lost track of the question.
Yeah. Well, we were talking a little bit about if clients are coming back into the market and they're buying it, they're buying the dip.
So thank you. This is where I was going with that. We saw a year and a half, 2 years ago, people were selling, more sellers than buyers, right? And when I received that material from clients, I would look to other clients to sell it to, and invariably we'd have to sell some of it back to a wholesaler, right? Because I didn't have enough buyers of the material in the secondary market. Now what we're seeing is I think I have more buyers than sellers now, but it's close. But when I buy from clients, I'm selling all of it retail. Wow. And I have clients left over that wanted it, that didn't get to it because they didn't get back to me fast enough. So they get angry with me because they missed the opportunity. That's a little bit different scenario than we saw a year or two ago. So it is changing, but it's not a tidal wave. It's ripples that are slowly building higher.
Yeah, makes sense. Well, we'll keep watching these deficits that are running up at incredibly fast paces. Rich Checkan is the president and CEO of Asset Strategies International. Thanks, mate. Always
My
great.
pleasure,
Appreciate
always.
it.
Looking forward to the next time.
Thank you. I'm Jeremy Szafron. For all of us here at Kitco News, we are on location again at the 50th anniversary of the New Orleans Investment Conference, here all week. Some great guests, so stay tuned. We'll see you next time.
Kitco News special coverage of the New Orleans Investment Conference is brought to you by Uranium Energy Corps and U.S. Gold Mining.